One of the things I love the most about investing in dividends is that I see growth. Not necessarily into the stocks themselves, but in those dividends. Now, I'm fully aware that those dividends don't just magically appear. They are subtracted from the value of those companies. So if you look at a company and let's say their stock price is $100 and they're paying a dividend of $15, that all of a sudden the value of that company has dropped down to $85. And then that $15 is paid to shareholders. And most people might then reinvest that $15 back into that company. So then are you really further ahead? Is it actually growing your wealth? Where my argument would be that, I'm able to take that, say, $15 and I can move it into a different position that might be on a different trajectory. Maybe it's kind of growing at a faster rate than the other stock that I took it out of. So I see dividends as giving me maximum flexibility in how I want to invest. This is, of course, in comparison to, say, growth stocks, where the value is locked in and the value is 100% determined on how well that company is doing overall. Nothing's really subtracted from it, so you know what that value is. But I personally prefer the flexibility and the passive income that dividend stocks provide me, that I can then decide what to do with that extra cash flow. So that's just my preference, and it works for me. In this video, we are going to look at the stocks that paid me a dividend in the month of November. And you know what? Right now, let me know in the comments, growth or dividends? What's your preference? What is your strategy? Growth or dividends or both? Drop me a comment. Let me know. Hey everybody, my name's Steve Coleman. Welcome to the channel. I hope you and your investments are doing well. I am a dividend stock investor and I put $150 every week into my tax-free savings account to raise some passive income to reinvest, as you've heard, into different dividend stocks to, again, just kind of snowball the entire portfolio to grow me some nice passive income that I can draw from when I'm old and wrinkly. Sorry for that image there. That's nasty. But let's go into those dividend stocks now. I'm using the Wealthsimple Trade platform for all my trades. It is zero commission when I'm investing in Canadian companies and Canadian ETFs, and that is one of the reasons why I love it. I love zero commission. I don't like paying fees. I don't. So let's take a look at the companies that paid me a dividend in the month of November. RioCan is a real estate investment trust. It paid me a dividend on November 7th of $5.78. Followed up by VDY, this is Vanguard's Canadian High Dividend Yield ETF, which I have $13.70. And this is a monthly paying stock, so this is a nice one that, again, gives me some of that income that I can move around and invest in some other positions. Then we have another monthly paying stock. There's a lot of monthly paying stocks this month. We have Pizza, $5.94 in Pizza. Then my biggest one is from Royal Bank of Canada. It is $16.64. Again, nice big one that I can move into other positions, since right now Royal Bank of Canada is, the price point is a little higher than I want to be buying into. If it kind of drops around the $120 mark, then I'll probably pounce on that opportunity. And then we have Diversified Royalty Corp, ticker symbol DIV, for $9.40. So the total for this month ended up being $51.46, which is more than half of what I received the month before. Now I've come to grips with this. It's the new reality where I've decided to look at my dividend income at a quarterly basis instead of looking at month by month to compare one month versus the other. So I happen to have more stocks that pay me in, let's say, October, January than I do November, February. And the only positions that I looked into that would pay me a dividend more, say in November and again in February, were more financials, and I think, than the oil and gas industry, which I don't want to add more financials to my portfolio because I already have 3 companies in there, and I'm trying to maintain an overall diversity in my account and just that would really inflate the financial side of things. And I don't really want to go in the oil and gas sector because I'm actually choosing to put more money into renewable energy companies, and I want to keep that around the 25% mark and really not invest in something that's related to fossil fuels. That's just my personal preference. This is not financial advice. This month is low. It's not going to get that much higher because, again, Royal Bank is the major one that I could be putting more money into, but then that would really skew my portfolio. And if Royal Bank ever then went down, it would just take more of the portfolio with it. I'm trying to keep a diversification of roughly, I think it's around 6 to 7% across the board of my positions. Again, this ETF represents a big portion of it, but that will kind of slowly whittle down as I build up these other positions. So that has been my November. Low amount of dividends, but it's just the name of the game. The month before was really high. So it really all averages out to be right now $100 a month in dividend income. So, which again, we're reinvesting because I'm investing long term. I'm going to build up these positions to keep growing more passive income. And that's how this month played out. So if you enjoy this kind of content, please like this video. It helps other people see it, and I think hopefully the whole idea of these videos is to kind of inspire others, to let them see how easy it is to grow this passive income. So I really want to reach as many people as possible and grow this channel. And I really love the community that we've built here. I really appreciate all the comments that you guys give me, and especially when times are kind of crappy and we're kind of questioning what positions we're holding. The comments are a great place for you and I to talk, but then also you can engage with other people as well. I don't need to give you permission to do that. So we're all grown-ups here. So that's it, guys. Keep it in the green. We'll see you in the next video, and we'll talk to you later.